Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. What a terrible Tuesday it turned out to be for the markets, given the fact that the Sensex has turned negative for the year. The Nifty also broke even below that 21,800 mark in intraday trade, although we did manage to shut shop above that level. But 21,900 was the crucial support level that we were talking about till now, but that has, of course, been broken. And 21,800, that's where we are at the current juncture. Mid and small caps see deeper cuts. You saw another percent or thereabout shaved off from the Nifty mid and small cap indices, and of course the breadth was also pretty much poor. 1 is to 2.5. That was the NSE advanced decline ratio. There was a spike in volatility as well, 14.14. That was the level on the India VIX index, up 2%. In fact, all the sectors were in the red today, led by IT, FMCG. You had pharma as well, that was beaten down, 2% cut coming in on all the three indices. Even the OMC pack was under pressure. The likes of HPCL, BPCL, IOC saw deep cuts. Remember, ever since the fuel price cut has been announced, the stocks have been on a downward trajectory. And then again, the double whammy of crude prices surging to $87 per barrel, which is a 4-month high. TCS, of course, was the top Nifty loser. There was a 9,000 crore rupee block deal. Reacting to that, other losers aside of BPCL was Tata Consumer, Nestle, Cipla, Dr. Reddy's. On the gaining end, few and far between, but Bajaj Finance continues to do well. Even yesterday, it was among the gainers. Bajaj Auto, Kotak Bank, Hindalco, ICICI Bank, HDFC Bank, these were some of the other gainers. But to take stock of the texture of the market, how it's looking going forward, and how should one really be navigating this bout of sell-off. Let's bring on board our guest for today. Joining me is Ruchit Jain, who's the lead research analyst at 5 Paisa, and I also have Kranti Bathini, who's the equity strategist at Wealth Mill Securities. Gentlemen, thanks a lot for taking out time this afternoon and joining us. Ruchit, let me come to you. 21,800 was taken out on an intraday basis. What is the next support level to really watch out for, and how should one really position themselves in this market which continues to go downwards?
A very good afternoon, Nandita. So, Nandita, I think just at the start of March itself, the mid caps and the small caps have given signs that the broader markets may enter a corrective phase. Because what we have seen that the new high in the Nifty, which was formed in the second week of March, was not confirmed by a new high in the mid cap and the small cap indices, and this is the negative divergence which we usually see in technical analysis, where the benchmark makes a new high, but certain sectors or certain important indices, if they don't make a new high along with the benchmark, then that's a divergence. And what we have seen a follow up in last 1.5 weeks is a follow up move because of the divergences. So I think we are still into that corrective phase. The mid caps and small caps have corrected very sharply, but the large cap names have not seen any significant correction, where a lot of unwinding is still I think pending. So if you look at today's trading session, we witnessed unwinding in the IT names where a lot of long positions were there. Even pharma towards the end, witnessed some unwinding of positions, and some crucial short-term supports have been breached. So I think considering this, we may see some sector rotations, but ideally the short-term corrective phase, which is that it could last for another week or 1 or 2 weeks. And levels wise, the major support for the market would come in the range of 21,500 to 21,400, where 100-day exponential moving average for Nifty is placed. So it's a short-term corrective phase. If one is a trader, then I think one needs to be very cautious at such times. Yes, long-term investment, I think if we get that correction towards 21,500, 21,400 range, I think that should be good opportunity where one can start buying for mid to long-term investment. But definitely a bit cautiousness from a short-term perspective. We are expecting further downwards towards the 21,500 mark.
All right, expect levels of 21,500 and 21,400. That's the view from Ruchit. But coming to you, Kranti, where are we, in this phase of correction? Would you say we are in the middle of the correction? We are in the last phase of the correction, or do you think this is just the beginning? Of course, this is the March effect at play. But how should one really navigate this March effect? Do you think a wait and watch approach is a prudent way to navigate this leg of the correction?
Andita, good afternoon. You started with a note that it's a terrible Tuesday, but catching the bottom are to answer your question, which leg of correction we are in the market. Catching that exact bottom is going to be very difficult, Nandita. And neither I try to do also. But one thing is clear, markets are in a consolidation phase right now. And what we can see is there is no respite for the market at this point of time. We can see a broad-based sell-off, especially the mid and small cap space at this point of time. But what the long-term investors need to do, one thing, nothing to worry at this point of time. There is no question of fear at this point of time, but the fear and greed factor always plays a key role in the markets. So the strategy for the investors is at this point of time, there is no hurry. If the investor is a long-term in nature and looking for a time horizon of a minimum 2 to 3 years time horizon, definitely at this point of time, the ongoing correction in the markets gives a wonderful opportunity for the investors. Probably they can enter in the market at a very staggered manner. They can try to infuse at least 5 to 10% of their capital at this point of time during this correction. But one need to act very stock specific at this point of time. What are the sectors investors are looking forward, and the company they are investing, how the earning visibility of these companies are looking, and also what valuation one is buying these companies is extremely crucial at this point of time. Most probably, just to answer your question, we are in the beginning of the correction at this point of time. But Nandita, if we analyze the previous corrections in the past 24 months in Indian market, whatever the reason can be, investors who invested at the optimum level of pessimism, they rewarded well in the longer term.
Right, nothing to really worry about. That's one big takeaway from what Kranti really said. But Kranti, in terms of central bank actions, today we saw the Bank of Japan end the negative interest rate era, right, for the first time in 17 years. And tomorrow we have the Fed meet outcome, right? In terms of all the central bank actions, do you think one needs to tread with caution here on? And secondly, I also want to get your thoughts on which is the weakest pocket in the market right now, according to you.
Yeah, Nandita. Yeah, as you rightly mentioned, after 17 years, Bank of Japan taken a stance that giving away about the negative interest rate policies are concerned. What it can give a reflection, Nandita, the global economy is in a strong note at this point of time, and also the global growth is reviving. And coming to the US markets are concerned, the US economy right now, it's going at a very strong pace at this point of time. So the Federal Reserve also not in a hurry or in a mood to reduce the interest rates at this point of time. They might probably, the rate cut is imminent, but the timing is the big dichotomy among the investors at this point of time. I'm sure they are not in a hurry to reduce any interest rate cut at this point of time. They are still waiting for some more points to take any stance with respect to inflation is concerned. So coming to our market, what area where we can see some kind of excesses are built up, especially the froth is still there on mid and small cap space. So it's by and large more about stock specific. Most probably the runaway what we witnessed in the PSU sector, these are the stocks which are much vulnerable at this point of time given the kind of correction. But among the PSUs, one need to wait and watch the stock specific actions at this point of time. Definitely PSUs are vulnerable at this point of time in the ongoing carnage in the market.
Right, coming to you, Ruchit, I want to get in your thoughts on the TCS. How is it looking on the charts after the kind of correction that has played out, especially for some of these large cap IT names? Would you say it's in the oversold zone now, and perhaps one should look to sell some of these stocks now, the likes of TCS and Infosys?
See, the stocks had seen a decent up move in last 3 months. TCS2 had rallied from about 3,300 to 4,200 without any meaningful correction. So I think this is just a corrective phase what we are witnessing today. Although today's gap down was more because of that large deal that had happened. But the longer term chart structures have not changed. But this is definitely a short term correction within an uptrend which could last towards up to 3850 to 3800 range. So some more downside is possible. 3800, 3850, I think that should be a good support base again for the stock if the stock has to start the next leg of rally. So from a very short term perspective, I think no, the correction is not done yet. But if the stock comes around 3800 kind of levels, then the risk reward ratio could turn favorable there, where fresh buying should be done.
So many block deals have taken place in the recent past. You had Whirlpool, you had Motherson as well, and now the most recent ones is Tata Sons. Of course, reportedly they have sold a 0.6% stake in TCS. Would this be a cause of concern as even promoters look to cash out and perhaps make some profits at this juncture? Do you think that would be a cause of concern for the market?
Absolutely. At this point of time, Nadita, markets are in a bull trend at this point of time, and the valuations look stretched at the broader market is concerned. Coming to the TCS as a matter, Tata Sons holds a substantial amount of stake in TCS, around 72.43. So diluting around 0.63% is not a big deal at this point of time. And given the kind of the liquidity they need to meet at the Tata Sons level, and also they're diversifying the money into more about the futuristic and other new business initiatives. That is the one reason. But coming at this point of time, promoter diluting in TCS is not a major key concern at this point of time. Still, they own substantial amount of stakes in TCS is concerned.
Kranti, we have quite a few pockets reacting to the surge in crude prices, OMCs, FMCG as well. Of course, this would mean increase in input costs for FMCG firms, right? So right now, when you look at these pockets, of course, OMCs had run up quite a bit. And ever since the fuel price cut came in, we've seen a good 10 to 11% correction. Would you still say that there is more legroom for an upside in OMCs, and perhaps this correction could be a buying opportunity? And secondly, FMCG, as a pocket has been underperforming quite a bit. Volume pain was already there. But now with the surge in crude prices, it seems to be a double whammy for both the sectors, so to say. So here on your thoughts on whether OMCs warrant a buy, and FMCG, could that be looked upon as a 3 to 5 year investment bet?
Yeah, coming to OMCs are concerned, Nadita, as you rightly mentioned, the stocks have witnessed a sharp rally, especially stocks like IOC and all the majority of all the oil marketing OMC companies are concerned. Given the kind of the current mood in the market and also the election season we are in, their OMCs are, we can say, they are lucky in one way. The reason is we just got a small cuts with respect to the under recoveries are concerned. We need to wait and watch how the crude oil prices are going to be in the next couple of months' time. I'm not in a hurry. I'm not in a camp where I expect a crude oil to rally further. This is a short-term spike with respect to crude oil prices are concerned. I expect a crude oil prices to softer further in the medium to short-term, medium to long-term also. But at this point of time, OMCs, investors who are looking for a decent dividend yield and also pretty much a long-term horizon, one can accumulate OMCs. Coming to FMCGs, definitely they're struggling with the margin. But in an election year like current phase we are going through, normally consumers are going to do well. If the investors have a pretty long-term horizon, one can look at the FMCG stocks. And in the FMCG, our favorite stock is Colgate. Any dip in Colgate because of the change in the business strategy of the management is concerned, it looks interesting for us for a longer term perspective.
All right, Ruchit, what about you? What do you think about how FMCG stocks like Tata Consumer and perhaps Nestle, these were among the top two laggards, right, from the FMCG pack. How are they poised? And even when it comes to the OMC basket, how would you read the charts of an HPCL now?
So if I just start with the FMCG space, then Nifty FMCG space index is indicating that we are not done with the correction yet. and probably a down move towards 50,500 to 51,000 could be there. We are right now just below that 53,000 mark, and the kind of selling that we have witnessed in some of the recent laggards such as HUL is there. No, or even ITC off late has not shown any kind of no relative outperformance. No, so I think that is also into some consolidation phase. So the heavyweights which can drive the index higher are not looking that strong. So I think FMCG from a near-term perspective could show some relative underperformance, and we could see that 51,000, 50,000 range, where some support is placed. So a bit negative on the FMCG space from a very short-term perspective. Now, as far as OMCs are concerned, a bit of volatility has been there because of the recent news flows. We have seen unwinding of positions. In fact, many of the PSU sector stocks have witnessed long unwinding, due to which this correction has been there. But it just seems to be a corrective phase within an uptrend, not a major correction. But in case if we see any further declines in BPCL towards 525, 530, where the 100 EMA support would come in, that is where I think the stock could find some stability. So one should keep this one should keep the stocks on the watch list, but not to buy at current levels. In case BPCL comes around 525, that would be a good time to take some contra trades over there. Similarly, even in IOC at lower levels, 140 I think should be a good support base.
What are your thoughts on a Paytm now, Ruchit? We have seen a good up move come in over the last few sessions. Yesterday we had a Yes Securities report where they have upgraded the stock to buy. There's target price of over 500 rupees. Do you think much of the selling is behind us when it comes to a Paytm? Chartically, how is it poised?
See on charts, if you see off late, it's more stock which has been moving from circuit to circuit and based on news. Whenever there are negative news, we have seen series of lower circuits. Anything positive comes, then again it starts going higher. So I think it's more news-based moves which are good going on. Very difficult to do any kind of analysis on such stocks. So no, we don't have any particular directional view for Paytm, but no, on pullback moves, the resistance would come around 450 to 460. So I think if any existing positions are there, it would be advisable to manage those positions with strict stop losses.
Right. Kranti, talking about the pharma space now, this space has been under the weather. If you see the last few sessions, even today we saw a good 2% cut coming in. Would you advise, medium-term investors to look at this opportunity to buy now, pharma?
Nandita, with respect to the pharma is concerned, we are quite neutral at this point of time. But the large cap pharmas are concerned, it is a place to hide to avoid this kind of market volatility at this point of time. One can look at the stocks like Sun Pharma and Cipla at this point of time for a medium to long term perspective. But there are certain pockets do offers value for the investors, but one need to be wait for the stock prices to further correct at a right time. One can add the stocks at this point of time. But nothing, there is no hurry at this point of time to add these names at this moment.
Right. Ruchit, I want to take a look at the charts of IOL Chemicals. Of course, there was news flow that the Brazilian watchdog has given a clean sheet, in fact, ended inspection at 10 of its units with 0 observations. That has come as a big boost. Of course, we saw an 11% or 8% kind of a rally actually over the last 5 sessions, and today itself it was up somewhere around 12%. 400 is where it's at. Would you call it a breakout stock just yet, or do you think it's just a one-off move?
Not a breakout as of now, but if you look at the stock has already went through a decent corrective phase. It in fact has been an underperformer within the pharma space. You look at the stock's all-time high. They were in the month of August 2020. Post August 2020, the stock where it hit at high of around 890 rupees. The stock is still available less than half of that value. And recently it's not that the entire pharma sector has not performed. Most of the pharma names, in fact, have shown a good outperformance, including some of the mid cap and the small cap names. But not this stock has relatively shown an underperformance. So I think somewhere the kind of volumes we are witnessing of late, it is indication that the price-wise corrective phase may be over for the stock. We may see some time-wise correction where the stock would continue to trade within a broader range. But yes, since the price-wise correction, if it seems to be over, then the downside seems to be very limited for the stock. So buy and dips should be the strategy for the stock. But just based on the 1 day's up move, I don't think one should take any call over there. The follow-up moves should be more important. Whether post that up move which we are seeing today based on some news, whether there is a follow-up buying in next few trading sessions as well. So I think if any existing positions are there, they can continue to hold on. But for fresh buying, I would like to see some follow-up buying after today's move.
All right. Last few questions, really, gentlemen. So, coming to Kranti, within the PSU pack, you've seen quite a few stocks, witnessing a bout of correction, right? So, after this correction, which pockets are you finding value in now?
Yeah, Nandita. Defense looks very interesting, Nandita, but the correction is very minute in defense, like stocks like Cochin Shipyard. These stocks have rallied a lot, like Hindustan Aeronautics Limited and BEL for the name. Okay, just to name a few of the stocks which are in the defense, they are looking very strong and there is a strong earning visibility. Any correction in these stocks, in these names, what we discussed, definitely it gives a very good entry opportunity for the investors who are looking for a medium to long term perspective. Stocks like names like Garden Reach, these are the stocks looks interesting at this point of time. Despite of the correction in the market, also they are showing their resilience in the market.
All right, Ruchit, if I ask you for a couple of stock recommendations for the next couple of weeks, what would you advise investors to keep on their radar?
So from a trading perspective, no, I think one should be very selective over here. But it's not that no entire market would show any kind of significant up move. But Bajaj Auto is one stock, within the auto space which is looking quite interesting. The high top, high bottom structure is still getting continued, and in spite of the broader market's correction, we have not seen any kind of significant negativity, or even the short-term supports are still intact. But as I said, one should be very very specific and very selective to pick stocks from a near-term perspective. 7890, around 7900 was the previous swing low. So the high top, high bottom structure remains intact till the stock is trading about 7900, and before that a good support is coming around 8050. So one can use these levels as a stop loss and look for buying opportunities in Bajaj Auto. But otherwise, Nandita, as I said, the near term market outlook is not that positive. I think one should ideally wait for some more corrections towards 21,500 to 400 range, where the risk reward ratio would become very favorable to take contra buys.
Right. And in terms of an FNO strategy, Ruchit, how would you be positioned for the next couple of weeks?
So if we get any kind of pullback moves towards 21,900 to 950. So today, if you see last three trading sessions, 21,900 was the support for the market. Now today, since that is broken, that should convert into resistance on any pullback moves. So if we get any kind of pullback towards that 21,900, 950 range, maybe tomorrow or in a day or two, then one should use that pullback as a opportunity to go short on the Nifty, or one can even play through short straddle where at the money put option can be bought, and monthly series put option of 21,500 strike price can be sold.
Right. A final word from you, Kranti. Now, of course, since the near-term outlook on the market isn't all that positive, would you still stick your neck out and say that before the general elections in May, perhaps the market would make one last or one final dash at a pre-poll rally? Would you concur with that, or would you say that right now till about elections, you'd continue to be stuck in a downtrend?
Nandita, markets are expected to be in a consolidation phase probably. And one thing we need to take into cognizance is the sentiment, the medium-term sentiment might be neutral, or it can be positive. Once the sentiment becomes positive, there is a ample liquidity is waiting to get into the Indian market, both in terms of the domestic level as well as international level. There are some funds have been waiting to eagerly enter into Indian markets at this point of time. So the correction, what we are saying at this point of time, can be narrowed at some point of time, and we can see a quick bounce back in the market in the medium term.
All right, expect a quick bounce back in the market in the medium term. With that, gentlemen, thanks a lot for taking out time and joining in and sharing your thoughts with us this afternoon. I look forward to having longer conversations with you sometime soon.
Thank you, Nandita. Always a pleasure to share our views with you.
Thanks. Thank you. Thanks a lot. Well, with that, we've come to the end of this edition of Closing Bell. Of course, not looking all that great on the screen. It's a sea of red. All the sectors ended in the red, and we've broken below that 21,900 support zone. But of course, the near-term outlook as well, not all that positive. But of course, experts have said that you have to be very stock-specific in this market. With that, it's me signing out now. Thanks a lot for tuning in. But you guys stay tuned to Money Control for all your other news and updates.